Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking today. Markets trade in a range on the first day of the week. The Nifty trades above the 11,000 mark. Auto stocks are the top losers in trade. UPL gains the most in over 4 years after brokerages say its latest acquisition will be value accretive. Hero MotoCorp is the top loser on Nifty today. The stock sees its biggest drop since November 2016. It is set to report its first quarter earnings on Wednesday. And SpiceJet gains more than 9% in intraday trade after an arbitration panel rejects Kalanidhi Maran and KAL Airways claims from the airline.
Well, also lined up on the show today, we speak one about global businesses and two about what's happening to some of the GST beneficiaries. So Nick Parsons speaks about what's happening on the global markets. So that's the global voice on the show. At about 2:15, we start our conversations with beneficiaries from GST, particularly the footwear industry. So Liberty Shoes as well as Relaxo Footwear will be joining us. And then, of course, market discussions with a battery of fundamental as well as technical experts. Hemen as well as Sumeet Bagadia come in and talk about the charts. TS Harihar a bit later on the fundamentals, as well as Dharmesh Kant speaking on the fundamentals. But here's what the market picture is looking like. And of course, yeah, a conversation on the earnings with Vipul Mathur of Welspun Group. However, what's looking like on the markets, about 1/3 of a percent, if I'm not wrong, is what the index is doing. I love that chart, by the way. It's overlapping the image of the Welspun Corp MD. Nevertheless, well, that looked better, by the way, if my producer is listening to me. However, 1/3 of a percent, 11,050 for the Nifty, 40 points higher, good going here. It's been steady. What's helping is that the banks have pulled back. After starting off flattish to marginally lower, Nifty Bank is now suddenly shown a bit of a spurt in the last 10 or 15 minutes odd of the session, which is actually good going. And the mid caps and the small caps too, in this expiry week, have done reasonably okay. They started off flattish with a marginal downward bias, but now the mid caps and the small caps will come up on your screen doing reasonably okay for themselves. Let's pull up the heat map and see which of the banks are leading the charge upwards in the last few minutes of trade. Has HDFC Bank come off from where it was? No, that still stays about 1.5% lower, but well, I think ICICI Bank ahead of the numbers this week, about 2.5. SBI and IndusInd are 2 or 3 names which are lifting the Bank Nifty higher. The Bajaj twins are doing well, but the highlights are two. One, what's happening to the two-wheeler names, Bajaj Auto and Hero MotoCorp, and then the comments from Bajaj Auto really hurting the two-wheeler space. Even TVS is down about 4%. And on the flip side, UPL, the big mover in trade, 13.5% higher. Big move because of the Arista acquisition and the synergies. The stock got sold off quite a bit, and that's what we spoke about in the morning. Now bouncing back. ITC, no negative news, is positive news. So ITC, VSC, etc., all of them doing well. And the Bajaj twins doing reasonably okay for themselves. Just very quickly, the mid-cap trends. Just let's identify the mid-cap trends, not go into the small caps. The key trends of the day, at least at the mid-cap end of the market. We're seeing some gains across the GST beneficiaries, so Havells, Bata, Symphony, that entire clutch of names which have benefited as a result of the GST cut have done very well. Result reactions also being seen, and the paint companies too, by and large, have done really well. So Asian Paints, Kansai and Shalimar Paints, all of them doing very well for themselves. But Navneet, what's the more liquid universe looking like?
Well, Neeraj, I think Nifty is almost at day's high right now, so some bit of traction, definitely contribution coming in from your heavyweights like ITC, which have been sitting in the positive territory. But talking about the futures, let's just pull up Nifty futures. Both Nifty, Bank Nifty futures have been trading at a premium, so that's good news. But no major build-up seen in terms of open interest. That's up only 2.5%. But the trend, if you look at the Bank Nifty futures, I think today's a day when we're seeing unwinding coming in for Bank Nifty futures, where open interest is down almost 4%. Futures, however, trading with a premium of 67 points. They've recovered from the day's low. Remember, HDFC Bank being a heavy weight on both Nifty and Bank Nifty has been weighing since the morning session. In terms of option strike, what's standing out today, now remember the maximum open interest on the put side so far was at 10,800. In today's session, that's moved to 10,900. So probably that's telling you the base for this market is only moving higher and higher. When we started the July series, it was 10,600. Now it's 10,900. So the range that one can watch out, at least in the expiry week, is somewhere between 10,900 to 11,100. And definitely today has been the day where more of put writing has been seen around the mark of 10,900 and the 11,000 strike. Whereas on the call side, some bit of open interest addition continues on the 11,100 call. Lot of stock futures which are in focus on back of GST revision rates and also on back of earnings. One such stock is Havells. Neeraj highlighted this counter, but I'm just going to talk about a bit on the trading activity. The volumes have been pretty high today. The stock's obviously gone because of some reasons today, so watch out for the delivery data. Futures have seen some bit of long position as the open interest surges nearly 25%, so good bet seen on Havells. The other one is UPL. Because of the deal which they announced, most of the brokerages have now said it could be EPS accretive. But if you look at the volumes, and I would request my producer to just pull up the ABAT function, the volumes are at 10 times its average volume that one has seen in the last 20 days. So the volumes are definitely on the higher side after the deal has been announced. Now, I also want to mention last week it touched lows of 537. So good 100 points recovery has been seen on UPL post the deal, and definitely long position continues. That's the ABAT function of the Bloomberg terminal. The white line is your today's volume, and the blue thin line is the volume of the average volume of last 20 days, telling you today's volume have been on the higher side. And lastly, two-wheeler stocks have been under pressure today, and one of them Bajaj Auto. The stock's down 14% in last two sessions. Clearly input cost pressure hurting the margins that was visible in the earnings. But in today's session, Neeraj, not only Bajaj Auto, we've seen stocks like TVS, Hero MotoCorp also touching their fresh 52-week low. Yeah,
I think two-wheeler stocks certainly under pressure, and I think we'll talk about them in detail in just moments from now as well. But let's kickstart this conversation, as is the norm every Monday, with a global voice. Nick Parsons, Head of Research and Strategy at Thomas Lloyd Group, joins us right now on the show. Nick, good having you. Thanks so much for joining in. The world markets seem to be digesting all the comments coming in from the US president very well. On Friday, maybe the earnings season in the US helped digest comments about the trade war. His comments on Iran have not really set anybody or set a heart or two aflutter. What do you make of the resilience of sorts that we have on the global markets, and the fall in crude prices, which is probably improving the sentiment in the emerging markets?
I think of all President Trump's comments last week, perhaps the most helpful for the emerging markets universe were those on the currency, because of course it's been the strength of the US dollar over the course of the last 3 months that has caused some of these concerns about margin pressure in the EM universe. It's also caused some concerns about input costs and of course the higher costs of paying foreign denominated debt. So against that background, the comments about the US dollar have been absolutely the key to helping emerging markets in India especially just to have a good start to this week. Last Thursday, you'll recall, we very briefly hit an all-time high for dollar rupee. I think it was 69.12 was the high. We saw dollar against other EM currencies, and we saw dollar China breaking 680 for the first time since July of last year. So anything that takes the steam out of that dollar rise is going to be helpful for emerging markets and for India in particular.
Nick, in fact, I was coming to that currency topic. Good afternoon, by the way, from India. We've seen now there are concerns emerging with regard to devaluation of yuan as well as an answer to the trade war fears which are emerging between these two countries, US as well as China. And we've seen the impact, obviously, coming in for a couple of the Asian currencies. Rupee, as you mentioned, touched all-time low last week. Do you see more pressure emerging, and what would be the impact on equity markets if dollar strengthening continues and we get to see more of depreciation coming in for the Asian currencies?
Well, it's a very good question, and I think it comes down to really whether China is using the exchange rate as a weapon or as a shield. In other words, whether it's trying to defend itself against President Trump's tariffs, or whether it is preemptively seeking a counterstrike. If it is defensive, then I think it's a slightly more benign environment for equities. If indeed it is a preemptive counterstrike, then I think it's going to introduce more volatility through the summer months up in the Northern Hemisphere. So I certainly would watch the Chinese yuan very carefully. We're at 679 this morning. The all-time high back in 2015 was 695. So we've got a little way still to go, but I think if we were to break 7, if we were to have headlines around the Chinese currency being at an all-time low, then I think that would be the trigger for another bout of volatility in asset markets, and that's something we're going to have to keep an eye on very closely from here.
Interesting. Nick, you briefly mentioned about crude, I presume, but just, you know, this whole deliberation about what the prices would be, and we all know that no one's quite been able to correctly predict what happens to crude. Just when it looked like it's heading all the way to 20, it's bounced back really strongly, and at 75, and everybody was talking about 90 and 100, it's come off quite rapidly as well. We can't predict crude, but with an assumption that this is where crude is currently, how big a sentiment positive could it be for the EM pack?
I think it's helpful if crude stays below $70. I think we're at a level where the interests of producers and consumers are pretty much in balance at current rates. I don't get the impression from looking at what OPEC are saying that really they're seeking to do anything to drive the price back to triple digits. And I think a $100 oil price is probably not in their interests from a geopolitical standpoint. But equally, the downside is going to be pretty limited from here because they will be seeking, whilst trying to boost production as much as possible, not to be eating too much into the revenue stream. So I think at or around current levels would be a reasonable expectation for the rest of Q3 and into the early part of the fourth quarter. And I think that's also important for what it means for interest rates because, of course, let's take India as the example here. The rise in oil prices up towards $80 was way in excess of what the RBI had been forecasting. It was that helped cement the move 25 basis points on the repo rate back in June. But I think as long as we're at current levels, the RBI can get away with having a hawkish hold in terms of their policy stance. If we were to go back to the highs that we saw 6, 7, 8 weeks ago, then that hawkish hold might well have to err on the side of another rate rise, and that would certainly be unhelpful. So I think oil does matter. It matters for producers, it matters for the businesses that are using oil as an input, but crucially also it matters as an input into the RBI's deliberations on monetary policy. So if we're at or around current levels, a hawkish hold at the next meeting is probably the top tip from here.
Okay, let's see what happens in the RBI policy in the month of August. But Nick, before we let you go, what's the overall view in the Indian markets? Because this has been a year where we've not seen much of FI flows coming in either into equities or into debt markets. So do you think this trend would continue? Because we've interacted with a lot of FIs and they have mentioned that the money is moving to the other markets within the emerging market basket.
Well, I think India still offers solid growth and a sound set of economic fundamentals which are going to limit the extent of any fallout. We're not concerned about the currency. The move to 69.12 wasn't about India last week. It was about China, let's be clear. India actually outperformed most of the other Asian currencies over the course of the last week. So it's not about a currency that's telling you there are international concerns. The equity market is up 4% during the month of July. It's a solid performance, and with EM as a whole helping to close that gap of underperformance relative to developed markets, then as long as the US dollar doesn't break into fresh cycle highs, then I think the emerging market universe looks set for a decent few weeks, and against that background, India's a market which we like very much from here.
All right, Nick, we leave it at that note. Appreciate you joining us today and giving us your views on the world equities and also on the currency markets. Shifting focus to markets, there are a whole host of sectors which are buzzing because of the revision that one has seen for the GST rates. In fact, the footwear stocks are seeing strong gains in today's session after GST Council increased the bar of having 5% GST on footwear up to 1,000 rupees, which was earlier 500 rupees. Let's discuss the impact of this in more details with Adesh Gupta, who's the Chief Executive Officer at Liberty Shoes. Hi Adesh, good afternoon and thanks a lot for joining. Well, the street seems to be enthused because the stocks moved higher post that news. Tell us, what is the material impact in terms of earnings with this GST revision, and what's the sort of average selling price that you guys have at Liberty? Is it below 1,000 rupees?
Well, first of all, I think we must thank the government for, addressing the challenges of this sector, which was the dual rate of GST 5% and 18%, where the MRP earlier was 500 rupees, where 5% GST slab rate was applicable. And it was hurting the sector in a big way. But there's a major course correction, by the government in addressing the needs of the organized players, particularly because then now the revision is that, the threshold has to be changed to 1,000 rupees. And since majority of, players in the organized sector are also, impacting from this particular, let's say, this change, I'm sure that, most of the organized players will benefit immensely. If I talk about Liberty in particular, well, about 20% of our revenue is coming from the product ranges between 500 to 1,000. And surely this 5% GST, it will get a lot of value for our business in terms of volume business, in terms of price correction, in terms of, bottom line as well as top line.
Interesting. Mr. Gupta, am I to presume that while the general belief would be that benefits would by and large be passed on, in cases like yours in select pockets, you might be able to retain some of the benefit as well?
Well, we have to make a dual policy because, we have been bleeding in those particular price points in the past, because when we were paying 18%, when the unorganized sector was not either paying 5% or they were not paying at all. So it was difficult for us to compete with those players. So as such, I can't say that 100% will be straight away passed on the consumer, but surely we have to look at, our finance team is working on as to what amount of benefit we can pass on to our consumers. Surely there will be some benefit to the consumer, and surely some we will retain because of the bleeding or the cost we were paying earlier from our own pocket.
Mr. Gupta, so again, I don't want a specific number here, but what I'm just trying to come to it is that what percentage of volume growth would you desire with this cut, because of which you will have to pass on that X amount of the benefit to the consumer so that the volumes come in and you retain the remaining so that your margins become better. So what's that quantum of growth in volumes that you envisage as a result of this move for your company?
See, we have to see it a little differently. We were competing with unorganized player and we were not able to get volume because they were not paying taxes, and the dealers or distributors were expecting for us to give us more discount by way of, promoting our product in that specific price point. But now when the GST rate will either rise to 5%, now we are equal footing, we have a level playing field with those unorganized players as well as organized players, now in a similar bracket. So I think the consumer will look at now more, towards the organized players and trade, because we were paying full taxes in the past also, and now we're also paying the same tax which, we never used to pay. So I think, on a volume basis, if I look at, it is too early to say any numbers as of now. But, since we are landing into the peak season, which is the Diwali and festival and marriage season, sports shoe is a big category where a huge amount of potential is there in this country. And I think, 1,000 rupees was a big threshold point for sports shoes consumers, which cheap import from China were hurting us. And then the domestic industry who were not paying taxes or were paying low taxes were, getting benefited. But I think now we'll have a level playing field. So I see, those numbers, 20% can become 25%. So we can expect about, 20 to 25% increase in that category particularly.
So I could be repeating my co-anchor's question here, but just a bit of clarity. Earlier, the GST rate for the range of 500 to 1,000 was 18%, which has now come down to 5%. Would you pass on the entire impact, or it wouldn't be? Because as per the GST Council mandate, the entire impact has to be passed on to the end consumer?
Well, we have to look at both ways. Of course, we will pass on the benefit to the consumer, but at the same time, we have to understand that, we were bleeding in those two particular price categories. So, one has to look at, as a business model completely, not, in isolation. When the organized players were bleeding, and paying through their pocket these extra tax, so naturally, you cannot just pass 100% of the benefit to the consumer. Not that we don't want to, but, you have to also see that the balance sheet doesn't hit further, because of those taxes.
So if you don't pass on the entire impact of that 18% to 5%, wouldn't there be any conflict then with GST Council?
No, I think we have a very transparent mechanism that we can show that very clearly that there was a bleeding when you are already losing money in that particular price point. So one has to see balanced view. You just cannot say, okay, if I'm an organized player, I was paying 10%, and now if I'm paying 5%, I can say straight away I have to pass on that benefit. That of course is there. But when there was unorganized player and organized player competition, then we have to see it a little differently.
Interesting. Mr. Gupta, my final question really, based on this, what do you expect your volume growth to be for the year? I know you said it's early days and you still haven't figured out what's the quantum that will be passed on and what is it that you will hold on. But a bare, base case estimate of the volume growth numbers that you believe you'll get at Liberty.
See, what we are foreseeing, from this sudden change of the tax, the industry was not fully prepared, actually. It was a surprise. It was a good surprise. But I think, on a guesstimate basis, I would say a double-digit growth should be, possible at all, completely. Okay. And I think in this category in particular, I can see about 20 to 25% jump in that particular category.
Very interesting. Okay, we wish you all the best for that, Mr. Gupta. Thank you so much for taking the time out and speaking to us. In fact, let's get in one more player in the same field category. Ramesh Kumar Dua is the managing director Relaxo, joins us right now on the show. Mr. Dua, good having you. Thanks so much for joining in. What's your assessment, Mr. Dua? Would you pass on the whole benefits, or would you part retain, part pass on, because you may have been not doing all that well in certain categories where the relaxations have come in due to the unorganized players eating into the business? How are you assessing the move that has happened on Saturday?
No, it has been a very good move on the part of the government. It will help the entire trade, whether organized or unorganized. Unorganized will try to become organized, and they will do the business in the right perspective, become more transparent. And the organized players already who are there, they will become competitive. So the prices of the article definitely will be passing on the benefit to the consumer, whatever benefit accrues. We are working on it. Exact figures we have not been able to come out, but definitely all benefit will go to the consumer, and it will help us, our company. On the whole footwear trade will flourish.
Right. Mr. Dua, could you tell us what percentage of your revenues were coming from this range of 500 to 1,000 rupees?
500, around, we have to really work on around 20% or 15%, something like that.
Okay, 20 to 15%. What's
15, 20, huh?
Okay, and what's the average selling price for Relaxo?
We have 500 to 1,000, 1,000 to above also, and then 70% maybe is below 75%, 500
okay.
Earlier. So now it will be, major part of business will be now belong to 5% category, which will benefit us immense.
Okay, so the net impact that you're saying will be obviously on the volume growth, and obviously the shift from the unorganized to organized market in that segment of 500 to 1,000. Could you then give little bit of guidance as to what sort of earnings trajectory that one can expect in FY19 because of the GST rate revision on your margins and also on your bottom line?
We are working on it, but ultimately effect will be positive. Growth will be there, double-digit growth we are also expecting in this segment between 500 to 1,000. This was our also struggling category earlier. Our majority business was coming from up to 500 because the rate was 5%. Then this category will now get a fillip. And EBITDA will also maybe improve, but we'll try to be more competitive and build volumes on it so that bottom line improves otherwise, indirectly.
So,
not by straight away improving the margin with us.
Interesting. So, Mr. Dua, what's the base case? I mean, what's the quantum of volume growth would you want or desire out of this move, say for the remaining 8 months of the current fiscal?
Maybe around 15 to 20%.
Okay, and for that you need not pass on the whole price cut. You will be able to get this 15-20% growth even with a partial price cut passed on, or would you need to pass on the whole thing?
We will try to be most competitive.
Okay.
It is not an opportunity for me to improve the margin, but to improve my overall
the reason,
line.
Mr. Dua, Mr. Dua, you know, the reason why I asked this to you, because when we spoke to some of your peers, they mentioned that they were bleeding in one or two of these categories, and they would use this opportunity to even bolster their margins and thereby stop bleeding, and which is why the reason why we asked this question to you.
You know, every company has its own strategic policy. So we will see whatever. Ultimately, we have to see how consumer gets benefited as a whole. So there are different price points, 500, 600, 700, even 1,000. So we have to see what should be best for the company also and consumer also and trade also. Accordingly, we will come up with our strategy, pricing strategy.
Okay. Mr. Dua, we wish you all the best for that. Thank you so much for taking the time out, and hope you do even better than what you are penciling in right now.
Oh, yeah, thank you.
That's
definitely, we are also optimistic.
Sorry?
We are also optimistic.
Well, I certainly hope it pays off.
Definitely good days. अच्छे दिन आने वाले हैं, वो आ गए अब अच्छे दिन.
Interesting. Thanks so much, Mr. Dua. Thanks so much, and all the best. Well, if you wanted to really know about why is it that the footwear stocks are doing what they are doing, this is it. This last 13-minute conversation tells you all about it. But interesting, Navneet, one company saying that they will not pass on, or they'll pass on some of the gains, not all, because they will want to retain some for pockets where they were not doing all that well. The other company, a completely different perspective.
That's right, but I don't know if that's going to go down well with the GST Council, because the clear mandate, I guess, has been that any reduction has to be passed on to the end consumer. If they don't do, obviously, it benefits companies like Relaxo and Liberty. And, you know, as we were talking in the morning also for Bata, they've been focusing more on premiumization, and average selling price for, I think, these two companies still remains below the 1,000 rupees. Average, obviously, as he mentioned, they do have products lined up above rupees 1,000. Bata, you've got Hush Puppies and all the premium brands now where they're focusing.
Do they sell the Bata Hawaii Chappal? Because that price point might be sub $1,000.
Yes, there is a category below 1,000, but I think off late in the last few quarters, even if you go by the management commentary and also by what's been happening with the earnings, they have been doing well because of the focus they have been putting it on premiumization.
No, but just, you know, when you ask this question to the management of Liberty, I think he mentioned that as per these norms, if you can show that you are bleeding and making losses in that category.
To offset against other category, maybe. If there's a provision to do that, then definitely I think it augurs really well for both these companies, because as they highlighted, 20 to 25% of the revenues, they come from that segment of 500 to 1,000.
Yeah. So one gains volumes, the other gains volumes and also stops bleeding in certain categories.
I think it's a volume game which will definitely trigger down to bottom line.
Yeah, and it's showing in the way almost all of these companies now need have rallied today. Footwear and consumer durables. Yeah,
and just to highlight, I think if we can pull up VLS Finance as well, that's another listed company which has stake in Relaxo Footwear, and probably that's the reason why that stock's also gone up 6% in today's session. Okay, that's about the footwear space, but let's shift focus to markets. Nifty at day's high, Bank Nifty above the mark of reclaiming once again the mark of 27,000 in today's trading session. Good time to get in Hemen Kapadia of KR Choksey, who joins us right here in the studio, and we've also got Sumeet Bagadia, Associate Director at Choice Broking. Good afternoon to both of you gentlemen. Hemen, for the longest time you've stayed away from taking any sort of, you know, naked position or call on Nifty. I think the recent highs were somewhere about 11,070, 75, 76. Most of the technical analysts are now saying that's the resistance. If that gets crossed, do we see the all-time high levels?
I think so, Navneet. Frankly speaking, things are fine. It's just that we have a 810 stock Nifty and we have the rest of the market. So we are analyzing three indexes, the Nifty, the Bank Nifty and the real market. But coming back to the Nifty, 52 hours between 10,926 and 11,078, Navneet, exactly what you're saying. And it looks as if the breakout is finally coming. And looking at the OI at 11,100 Navneet, I think there could be a little bit of a scramble in terms of short covering, because I think there's significant OI at 11.1 and we've remained in that 10.8, 11.1 range. So yes, it looks like a breakout. It looks poised to be on the verge of a breakout. And interestingly enough, Navneet, I think if you see the Bank Nifty 27.1 and 27.200 call options, Navneet, I think in the past some time, I was just traveling, so I haven't seen the complete picture, but I think there's been a significant OI built up of almost 40%. So that looks like a long build up. So I think if the breakout comes in, Bank Nifty support is needed. And the VIX cool off has happened. We were at 13.53, we are below 13. So everything seems to suggest it's time for a breakout, Navneet, the way I look at it. But yes, 11,078 needs to get taken out, which is probably on the anvil.
Okay, that's the Nifty view coming in from Hemen, Kapadia, and definitely VIX collapsing 5% will be auguring well for the bulls. Sumeet, what about you at these levels? Would you take any fresh trade, or tell us what's the level on the upside that you're watching out?
Hi, good afternoon. Well, the index is looking good to me. We have been giving buy call in index. Now, immediately looking at the chart, it seems that from here on we can see extended move, in which we can see 11,120 as an immediate target, and if 11,120 is taken away, then we can see move till 11,200 levels in next couple of days. I think till the time supports are not taken away, it's better to be on buy side. Downside 11,990. We like as a good support for index. So till the time these levels are not taken away, it's better to be on buy side. One can hold on the existing long positions with the trailing stop losses placed at around 10,990 levels for the upside target of 11,120 as an immediate target, and above that we will see 11,200 levels in next couple of days.
Okay, let's talk about stock recommendations. So, Sumeet, let me come to you first. What are the ideas that you're giving out or recommending at this hour?
Well, I have two stocks for the day. The first one is from banking space, and that is SBI. SBI is looking good to me. I think it's a good buy at 264, 265 levels, which is the current market price. One can maintain small stop loss of 260 on lower side for the upside target of 275 and 280 levels in next couple of days. The second stock is from cement space, and that is Ultratech Cement. I think one can initiate long position in Ultratech Cement at the current market price. That is at 3960, 3970 levels, and from here on we can see a move around 150 points on high side. That means on high side one can expect targets of around 4050, 4100 levels in next couple of days. For a trading perspective, one can initiate long with the strict stop loss to be placed at 3850 or 3870 for the upside target of 4100 levels.
Okay, let's talk about Hemen, Kapadia stock ideas as well. Hemen, what are the recommendations that you're making at this hour for today?
I think couple of stocks, Neeraj, which look interesting. Firstly, I think Ramco Cement is looking interesting. Oversold, positive divergences, crossover buys on the daily charts look set for a bounce. The cement pack looks promising and Ramco looks good. So buy at around 638, stop loss 628, target 658. Second one is MGL, Mahanagar Gas, Neeraj. Buy at around 835, stop loss 822, target 861. Deeply oversold, positive divergences, sideways consolidation, crossover buys on the daily, weekly look set for a breakout. As far as the Nifty is concerned, I think like Navneet said, I have a sell call on the 10,800 put options of the next month. Not this month because it was only some 9 or 10 rupees, not much to gain. The idea is not to sell it for a long time, but to sell it for a few days. And once 1178 crosses, one can square off these put options and go long vanilla futures Nifty and keep these levels at the stop loss.
Okay, those are some strategies coming in from our technical experts. Pull up Bajaj Electricals. That stock's also at a day's high right now, sitting with gains of nearly 17% in trade. So good going for Bajaj Electricals. And obviously, other than that, we've got stocks like PC Jewelers. After surging 20% on Friday, that's up another 18% in today's trading session. And just want to highlight the cigarette stocks as well. VST could be reacting to its earnings today, but also look at something like Godfrey Phillip, which is there in the futures and options market too. That's seen gains of nearly 8%. And remember, this is not a very liquid counter if you even look at the F&O space. And also ITC has been surging, which is a heavyweight, and that's been supporting the market. I mean, if I could come to you, ITC for the longest time, which was languishing between the 250 to 275 mark at 283. What's the chart suggesting?
Navneet, I think it's almost 10-11 months of a consolidation. and the range, like you said, is fine, 250, 290. If you make it slightly smaller, it's 259, 276. We're about 276 at 283. I think we're setting the stage for a breakout about 290. That happens, we should move to 310, 320 over the next few months. Looks good. Rounding bottom, decent, if not a good consolidation. Looks very promising. Sumeet.
Yeah. All right, that's about ITC. Go ahead, Neeraj. You want to say something?
No, not at all. I was just saying that whole space today as well. In the morning, at least, VST was a stock that was doing rather well for itself. No bad news is good news. But hey, I mean, it's not out. I mean, I think brokerages, when I was reading the notes, they mentioned that instead, if there is a definitive comment, even if it was slightly negative, if it would have come in, that would have removed the uncertainty, and maybe that would have been a bigger positive. But the market currently seems to be rewarding no bad news as good news right now, despite the fact that there is every chance, as is the case of ENA being included in GST for United Spirits, coming in later on.
Also, I think they were expecting, because there were talks that maybe after 1 year of GST implementation, they will definitely revisit the compensation cess for cigarette space. It's almost 1 year and they didn't touch this space. So yeah, and no change is definitely good news.
Do we live GST Council meet to GST Council meet? Between now and then, maybe the stock will again go down, then come up again if there's no news.
Yeah, because they categorically said we'll see when we'll review after 1 year how it shapes up, and the street is always expecting higher taxes from the sin industry. So
yeah, why not? Hari, come in on this one, and lots more talk about really two-wheelers and the likes as well. But firstly, the cigarette space. No bad news, good news, the market rewarding them. Too much, too soon?
I would believe yes, because frankly, in the whole discussion of GST, there was no mention of cigarettes. So I think what I understand is there is a status quo. So there's nothing that's changed. And, considering the kind of approach the government has taken in the past, I would believe that they would use every opportunity to fleece cigarettes to the maximum. So I don't think they're going to spare any effort. So any opportunity they get, they're going to fleece it to the maximum. And I think what we saw in ITC, it took 1.5 years to move from 260 to 340. Then it took 2 days to move from 340 back to 260. So, that I think is a risk that you still run on ITC. And I'm not very, very confident in the stock. Possibly a lot of GST cuts happen on food products, FMCG products. That I think could be a little positive for ITC, but on the cigarettes front, I'm not too sure.
Okay, what about the two-wheeler space, Hari? Bajaj Auto, hitherto being regarded as the one which will defend its margins no matter what the other costs would be, has finally, well, maybe has taken swallowed the pill of disappointment and gone out and said that now they want market share, even if it comes at the cost of margins. It led to a fall in Bajaj Auto, yes, but even Hero and the others have fallen, because presumably if Bajaj cuts prices, the others might have to follow suit. How big a negative for the space at large?
See, I look at two-wheelers as what happened to the FMCG space about 15 years back. People said that Hindustan Unilever and Procter & Gamble will never compromise on margins. That one fine day they started getting into a price war. I think we could get into a price war on the two-wheelers, because the problem is the space has got awfully overcrowded. So you have Hero Moto, you have got Honda, you have got TVS Motors, and you have Bajaj. And interestingly, Bajaj is number 4 today in the domestic market. And the other three are above Bajaj Auto. I think Bajaj Auto realizes somewhere, and I remember an interview with Mr. Rahul Bajaj, he said that, at one time we ruled the industry and today we are nowhere. So I think there is some kind of a feeling that if it is essential to cut prices, let us do so. And I would believe that if you look at the language of the Bajaj quarterly results, they are very clear they want to go from 16.5% to 20.2%. So that is the kind of a market share growth they are looking at. And if you're looking at a 4% market share in a tightly competitive market, I think it clearly means that Bajaj is going to drop prices like crazy. So I think if Bajaj does, probably Hero will follow, and Honda and TVS will have to follow.
Dropping prices, Hari, at a time when there are also input cost pressures, which was clearly visible in the margins this time around. So it's going to hurt the earnings even more going ahead?
It would. But I think, let's understand that Bajaj is in a slightly different position compared to the other three. Bajaj is about a 48% export market share compared to, the other three. Bajaj is about 48% of its sales coming from export. So its domestic chunk, if you look at it, is very small. It has the capacity. Now, Africa is turning around. So it's getting the cash flows from Africa. It has got the capacity to probably give some more discounts. And my understanding is Bajaj will do that. They will use the inflows from African exports to probably subsidize its domestic business. And that could mean more cuts coming on the price front.
Okay. Well, So some more pressure out here, and this may not be the end of it really. I mean, over a 5-year period, the strategy might well pay off for Bajaj Auto, maybe for the others too. Volumes may pick up. Not that the volumes are doing too badly right now, but hey, the near term, there could be pressure, and for now, there is certainly sentimental pressure. Hemen, if I can bring you in on this, you do study long-term periodic charts or period charts as well. If you can look up Bajaj Auto and just tell us how do the charts look for you right now? Is there a short-term and a long-term target which are starkly different from each other currently?
I think so. We are, frankly speaking, not looking at all good, Neeraj, as far as Bajaj Auto long-term is concerned. The company was split, so we have data since 2008 ending. And we have a demand line which is supporting the entire move from 2008 ending to 2018. And now we are breaking it. So, and the oscillators have given crossover sells. The monthly chart is on the verge of giving a downward bar reversal. Interestingly enough, the month is not even over, Neeraj. The volume, cash market volume, not delivery marking, but the cash market volume in Bajaj Auto is the highest in the last 6 years. With the month coming to an end, I have a feeling on NSE this is going to be the highest ever volume in the history of Bajaj Auto. So, doesn't look good. Seems like a sell-off. Looks bad. 2,700 has not been breached in the last 1.5 years from a monthly closing point of view. And we're close to that, but if we close below this level at the end of the month, I have a feeling it's not looking good, and the long-term charts clearly are suggesting correction, trend reversal, or it's not looking good, Neeraj.
Not looking good. Well, not surprised there. Volumes being high and the stock looking weak as well. Is there a short opportunity on either a Bajaj or a Hero or a TVS Hemen currently for a short-term trader?
Not without a bounce, because Bajaj Auto has come up from 3160 to 2655. I need some sort of a I know this sounds wishful thinking, but I need a pullback to 2820 or so to go short in Bajaj with a stop loss of 2940, because we just get blindsided and get stuck. In terms of Hero, yes, Hero also doesn't look good from a longer term point of view, but I think whether it's a Bajaj drag or whatever, it's virtually fallen off a cliff. 3500 to 3090, the big move was from 3660 odd. So once again, the level was 3400, Neeraj. I think their outlook has also turned negative over there. But once again, coming back to your main question, shorts without a bounce seems dicey. And in terms of TVS Motor, I wouldn't short the stock.
Okay, remember Bajaj Auto has already fallen 14 to 15% in just last 2 sessions. Well, talking about the auto pack, pull up the intraday chart of Maruti. That surged almost 3%, and the gains have just come in the last half an hour of trade or something. There's a very, very sharp surge that you can see from Maruti crossing the mark of 9,700 as we speak. Sumeet, let me take a technical check on Maruti on the charts. What would you suggest considering the surge that we've seen just in the last 5-10 minutes of trade?
Well, see, Maruti has broken the recent highs. Now, last 5 to 7 days, we have seen a range-bound trade in Maruti, and now we have seen a breakout of that range-bound trade. Looking at the chart, it seems that the stock is headed for 10,000 levels. Immediately, 9,700 is a small resistance. Once that is taken away, we can see move till 9,900 or 10,000 levels in the next couple of days. Those who have taken long positions in Maruti, they should hold on the existing long positions. One can initiate fresh long at the current market price, and if there is a dip of around 40 to 50 points from present levels, then that should be used as a buying opportunity. From here on, we can see a move around 200 to 300 points in the next couple of days.
Well, the other stock which has gone up is Vedanta. Remember, this was weak, I guess, for the longest time in this series. And Vedanta is also, I don't know if this is any sort of short covering bounce that you're seeing. The futures may give you a better picture of what's happening. If there is any sort of unwinding, which means that there could be a short covering bounce for this one. I mean, on the charts, Vedanta, with this surge, any position that one can take or avoid?
No, I think so. What you're saying makes a lot of sense. I was just trying to see if there is corresponding F&O data to support that, but yes, technically speaking, absolutely no need, deeply oversold. 200 hasn't been breached. That was a low last week, and I think the low this beginning of the week. But yes, we're on the verge of getting an upward bar reversal. Indicators are slowly turning positive. Hourly, 2 hourly, 3 hourly charts, things are looking good. Yes, I think it's worth a contra buy call, Navneet.
Okay, that's about Vedanta, 4% higher. But let's talk about the top gainer on Nifty today, and that's UPL. Hari, what did you make of the deal? Before the deal, there was a lot of apprehension. We did see the stock correcting, and now I guess we're back to where the stock was trading, you know, maybe last month, because there's a 100-point recovery, at least from 19 July. I was watching out for UPL. More debt comes on board. There are some synergy benefits also being highlighted by the management. Net, what do you think? Is it EPS accretive?
I would believe EPS accretive, yes, but I think debt is something they're a little cautious on, because I think the Arista acquisition is about, I think, $3.4 to $4 billion. But obviously, it's a company that is backed by Bill Ackman, so you definitely, you know, have a reason to believe that it's a good acquisition. But at this point of time, I think I'm more worried about the debt part. So probably, I think it will depend on the cost of debt, whether it's a domestic debt, foreign debt. I think what is the total cost? A lot of things will get in, but I think prima facie in terms of business
it's foreign debt, I guess, 4.5%. They said that our additional EBITDA will be able to take care of that interest cost.
Yes, but there's a currency risk you always run on all this. That is the whole problem with foreign debt. So I think, yes, it's definitely going to be EPS accretive. And as far as a company like UPL is concerned, this was the opportunity to actually take a big leap in the agrochem space, because Arista is actually bigger than UPL in terms of size. So I think it's a good opportunity for UPL to get into the big league. But, you know, as you've seen in the past, mega global acquisitions have had a lot of problems. Like you look at Bharti taking Zen, you take Hindalco taking Novelis, you take the Tatas taking Chorus. You know, there have been a plethora of examples where there have been problems. Tata Motors probably is one global acquisition, I would say large global acquisition, that has gone on smoothly. But I think all the others have had their own share of problems, largely because of the debt component. So I would believe that is one thing UPL needs to watch out for. It doesn't have the pockets and the size of Tata, so I think that is something they need to watch out for. But otherwise, I believe prima facie, the deal definitely looks to be accretive.
Oh, interesting. Sumeet, Bagadia, you want to come in on UPL as a trade?
See, UPL has given UPL was oversold. Today we have seen a very good move in the counter from lower levels. I think the stock has made a base, and now from here on, we should see a good upside move in next couple of weeks. Immediately, the stock has small resistance at around 640 levels. Once 640 is taken away convincingly with volumes, then from here on we will see a move till 720 levels, and that is a 200 DMA for UPL. I think those who have taken long positions at lower levels, they should hold on the existing long positions. One can initiate fresh long positions if there is a dip of around 10 to 15 points from present levels. Immediately 640 will act as a resistance. Once 640 is taken away, we will see an upside move of around 8 to 10%. And on high side, we can see levels of around 700 or 720 in next couple of weeks.
Okay. Hold on, UPL. But okay, I'm just moving back to footwear space, Hari, because I think you're bullish on Bata India. We just spoke to the management of Liberty and also Relaxo talking about the GST rate revision. But what stands out for Bata compared to the other companies in the same sector?
I would believe two companies, in fact, Bata and Relaxo are the two stocks we like, because they have a fairly broad market share as far as the sub 1,000 segment is concerned. And since now the slab has been extended from 500 to a sub 1,000 segment, I would believe that both Bata and Relaxo should be passing on most of their benefits to the end customer. And I think that is what most of the beneficiaries are going to do. They'll pass on most of the benefits to the end customer. And I would believe that at least help them expand their market without compromising on margins. So yes, Relaxo and Bata, I think the direct impact of the GST rate cut should be positive on the bottom lines.
Is Bata the preferred bet out here, or would you be agnostic? You would be happy to take any bet in the footwear space?
No, between Bata and Relaxo, I think we would be agnostic. We are not too keen on the other players like Liberty and others, but Bata and Relaxo, I think we are quite comfortable with both the stocks.
Would you believe this same benefit gets passed on in a similar way to the paint companies as well? Again, a 10% reduction. Again, a fair bit of unorganized play out here in the sector. Do they benefit as well as much?
I'm not sure it's going to benefit a company like Asian Paints, because I'm going to understand Asian Paints sales are less elastic to these kind of changes. But if you look at let's say a middle level company like probably a Berger Paints, I think a Berger Paint should probably get a better benefit of this reduction in cost, because Berger caters to a lot more of the mid and small sized home segments compared to Asian Paints. So definitely Berger should be a bigger beneficiary compared to Asian Paints.
Interesting. What else today? And at 52-week highs include a Bajaj Finserv, another 3%, 6862. It's not so much Bajaj Finance, but Bajaj Finserv's day. So that one is doing very well. Bandhan Bank has slipped really from the highs of the day, is now down about 3%, 667 currently. Intraday did hit the fresh 52-week highs. And something's up with the Adani Group stocks the last few days. I mean, Navneet had spoken about them entering into the ban. That also didn't really alter the moves too much. Adani Ports is up another 3% today. Enterprises may be slightly down, but it's had a fabulous run the last few days. And in fact, no, that is also gain, up about 5%. Adani Green Energy is up 20% after a 6-7% up move in Friday's trade. And therefore, Adani Green Energy is trading at fresh highs for itself too. So something's up with some of the Adani Group stocks doing very, very well on the charts. Hemen, something would have popped up on your screen the last few days from the Adani Group. What looks the strongest? Is it Adani Ports? Is it Adani Enterprises? Or would you look at any of the other names?
I have a feeling that Adani Ports looks relatively fresher. The thing is, Adani Enterprises has moved 65% in 2 weeks. So,
Yeah, it's a bizarre move actually. We've been talking about it for both Adani Enterprises and Power, I think in the last 1 month.
So, frankly speaking, it's too late to chase it now. So
you're talking about Adani Enterprises right now?
Yeah, Adani Enterprises.
So that's too late to chase.
Yeah, even like she said, Power, okay, medium-term bottoms in place, but I mean, if the stock rockets up like this for 4 weeks in a row, I defies all laws of gravity. No levels have, frankly speaking, worked. So I'm not sure if one can look at it now, but Adani Ports relatively is better. Right. Better in the sense it's cheaper, technically speaking. The bottoms are closer. It's just given a breakout from a 16 trading sessions sideways movement, closed above the 55-day moving average today. Indicators have given crossover buys. The volume in the cash market has picked up. I need to check the futures, but yes, simply put, Adani Ports looks better.
Okay, by the way, the market, pull up the Nifty, and there is a big move there, and there are some really strong moves that are happening in select names. Maruti Suzuki right up there, and Vedanta, both of them have given a big spike in the last few minutes of trade. Look at that move and surge in Maruti Suzuki the last 15 minutes. Vedanta following a similar pattern. It's gained almost 3.5% in the last 15 odd minutes of trade. There's some strength in Ultratech, some strength in Tata Steel and Hindalco. I think commodities by and large seem to be coming up in a hurry. Maruti and Tata Motors are amongst the two auto names which have really zoomed up in the last few minutes of trade. So do watch out for these companies, all of them surging and taking the Nifty along with it. The dash in the last few minutes, Hemen, Vedanta, Maruti, Ultratech, maybe the index itself. Would you trade it?
Index is on the cusp of breaking out. Vedanta, Neeraj just gave a buy call around 10 minutes back. But yes, even now, I still think there's a lot more headroom left in Vedanta in terms of playing the dead cat bounce. Maruti looks good, has moved up, but I have a feeling we are setting the stage to 10,000, and if I were to take a 2-3 month point of view, we probably going towards 12,000 as far as Maruti is concerned. Neeraj.
Okay, Neeraj also mentioned Ultratech. Remember that stock's too gone up. And Hari, talking about the cement pack, Ultratech has come out with the numbers. Volume growth was good because of, I think, the capacity utilization of JP assets went up for the quarter. But overall, I think the entire space is reeling under pressure due to higher input costs, pet coke and diesel prices. We've got ACC coming out with the numbers. Any expectation from there?
Well, most of them are quoting very close to the lows, so I would believe that results at least in this quarter for Ambuja, I think ACC, probably most of the names other than Ultratech should be a tad disappointing. So we are not really very positive in any of these names. Probably I think Ultratech, because of its size in all India kind of a spread, it could still get away. But I think the other cement companies are going to have a tough time in this quarter.
And are you surprised? No GST cut for cement companies and you have paint rates going down?
Not exactly. No, historically, cement has always been, even from the days of excise duty, I remember, cement used to be one of the, most aggressively priced in terms of excise imposed on all of them. So I'm not surprised. Government does look at cement as a kind of a captive, what I would say, and an easy commodity to kind of tax. So they always use that intensively. So not surprised. Cement has always been like cigarettes. It's unfair to compare, but like cigarettes, they've also been subject to a lot of high levels of duties.
Yeah, with so much thrust on housing for all by 2022, one would have thought, and I think couple of the street was also expecting the rates to come lower. Hari, thanks a lot for joining us and taking us through your thoughts on the markets. Well, before slipping into a short break, Welspun Corp reported a 29% jump in its June quarter revenue, but the EBITDA dipped almost 24%. Nikki Mirchandani caught up with the MD and CEO of the company, Mr. Vipul Mathur, and began by asking him about the key highlights and what weighed on the EBITDA this time around. Listen in.
We had delivered an EBITDA of 220 crore rupees. But if you see on a Y-on-Y basis, yes, it is down by 40 crore rupees, or actually 50 crore rupees. If you remember, in the Q1, we have an exceptional income of around 30 odd crore rupees, which was sitting in this 270. So on a comparable basis, it is 240 versus 220, which is almost in line what we have been expecting for this quarter.
All right, I'll appreciate if you could let us know a little bit about the breakup of your order book position that stands currently at 1,602 KT, which is more than double the figure of 700 KT that you've reported in the corresponding quarter. Where are we seeing maximum orders? Which geographies are we seeing the maximum orders flowing in from?
Yeah, so we have an order book of 1.6 million, valued of over more than 11,000 crore rupees, $1.6 billion. And this order book is very evenly spread. If you see, we have an order book of almost 400,000 tons in India, 300,000 tons in America, and almost 900,000 tons in our Saudi entity. So all the three geographies in which Welspun is present, we have a clear order split.
All right, sir. Also, could you take us through your debt picture right now? From where I see it, the net debt currently stands at 4,756 million as compared to the figure of around 4,216 that we've seen sequentially, while there is a sharp dip that we've seen for this figure on year-on-year basis, that's around 8,636 million.
Right. So we ended the year with a 422 crore rupees debt. It has gone up a little bit. It has gone up to 476 in this particular quarter, and that is primarily because of our working capital requirements going up. As we are ramping our production, the working capital requirements are slightly going up, and that's the impact you are seeing it. But it's a marginal increase of 54 crore rupees, and at the end of the year, I think so it will stand normalized.
Sure. I'd also like to understand a little bit about your sales volume of pipes totally and ex-Saudi Arabia operations. If you could give us that figure and also explain the rationale behind it along with the expectations that we have for FY19.
So if you see in this particular quarter, we have done sales of 229,000 tons for the pipe side of it, and almost 128,000 tons on the plate side of it. And as we have spoken earlier as well, on a quarter-on-quarter basis, we expect some, significant improvements. If you see, vis-a-vis the fourth quarter, we did almost 200,000 tons, and as against that, this quarter we have done 230,000 tons, and that's the way we are targeting moving forward in all other quarters as well.
Sure. In that case, the last question that I have for you is I'd like to understand a little bit about your cost pressures going forward and also for the quarter.
I'm sorry, the cost?
Sure, I'd like to understand a little bit about your input cost pressures.
Can you repeat it, please?
Sure. The last question that I have for you is I'd like to understand a little bit about your cost pressures, any input cost pressures that the company is currently facing, which is currently weighing down on the margin profile of the company. Any raw material inflation?
Typically, the biggest cost pressure what we have is, so typically what we have, the biggest cost pressure is because of the steel side of it, and literally, as a company, as a policy, we always hedge our steel. So all the steel which we have, orders we have in US and in India are completely hedged on the steel side of it. The only steel which we do not have hedged completely is on the Saudi side of it, but then the execution period is long, and we are seeing a sort of a market correction happening on the steel side of it. So at this point of time, as we speak, I don't see any imminent risk emerging because of that.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
With countdown right here on Bloomberg Quint. 27 or 28 minutes to go for the markets to shut shop. Let's see what Europe is up to. We're doing very well for ourselves, mind you. Our own reasons. Europe is not doing all that well, to be honest. And Europe didn't do well in Friday's session too. By the way, it was down about 1%. US markets did okay, but Europe didn't. They're continuing from where it left off, down about 1/3% for the FTSE and the CAC at least, if not the DAX. The Dow futures should come up on your screen. Lots of comments from President Trump. Not that it's having too much of an impact because the earnings season in US as well is shaping up reasonably okay for itself. Okay, let's actually get in Yash Upadhyay first, because while we're talking about the markets doing so well, it's important to highlight the 3 or 4 names that make it to Yash's list. And let's join him on Fab 4. Yash, good afternoon. Thanks for joining in. I won't be surprised if UPL makes to your list.
Absolutely, Neeraj. It would be criminal to not have UPL in our Fab 4 list. So that one's the top stock that we are looking at. It's up 14.5%, the most that it has gained in over 4 years after the company announced that it would be acquiring platform specialty chemical business Arista Life Sciences for $4.5 billion. The brokerages have given the deal a big thumbs up as they believe that the acquisition would be EPS accretive. Vst Industries is up 13% on the back of strong numbers. Their revenues have grown by 16% to 243 crores. Their net profit has gained by more than 54%. Also, their margins, they have come in at about 40%, which is a 9 percentage point growth on a year-on-year basis. So all in all, extremely good set of numbers. Paints stocks are also buzzing in trade today. So something like a Shalimar Paints, that one's up about 5%. Kansai Nerolac, that one's too up about 4% or so. After the GST Council on Saturday reduced the incidental tax rate from 28% to 18% on paints and varnishes. And lastly, we're also looking at Bajaj Finserv. This one's up close to 10% considering today and Friday's move. Volumes too coming in significantly higher at almost 3.4 times the 20-day average. Back to you.
Okay, Yash, thanks for bringing those Fab 4 stocks of the day. While we've discussed most of the sectors which are being impacted by GST rate revision, I want to address the hotel pack too. Pull up stocks like Kamath Hotel, Royal Orchid, Hotel Leela, all of them are doing pretty well. Kamath is right now at day's high, sitting with gains of 15%. Royal Orchid up almost 5% in trade. You've got EIH, Lemon Tree, Taj GVK, all of them have registered some bit of gain. Remember, hotels will be now taxed on actual tariff basis and not on declared tariff, which could augur well with regard to occupancy rates. In fact, that was the commentary coming in from Royal Orchid who have mentioned that the move is positive in terms of ease of business and also occupancies, and the general gap between declared and actual tariff, according to Royal Orchid, is between 15 to 20%. So watch out for this space as well. Well, moving on, 11,080 by the way on the index. So we've crossed the recent high of 11,076. All-time high levels still stand at about 11,171. So we are bracing ourselves once again. Let's see if the closing can come up at these higher levels today. But bring in Dharmesh, independent market expert, who joins us on the show now. Dharmesh, a lot of stock-specific moves on back of results, on back of deals, on back of GST rate revision. Anything which stood out for you the most today?
Yeah, good afternoon. I think UPL stands out among all the lot in spite of a 14% kind of up move. But if from a long-term trajectory, the deal does look quite a lucrative one if things pan out the way they have been envisaged. Because from a free cash flow to the firm perspective, from a 5 years time horizon when this debt has to be repaid, it's a neutral to the cash flow. But EPS will be accretive, and post that, it will be a huge cash compiler. So from that point of view, I think if somebody has a very long-term view, I mean at least a 3 to 4 years kind of holding period should be there on UPL, then definitely this is a multi-bagger from that point of view. Other than that, the cyclicals stand out and from the consumption point of view, and again the BFSI segment, private sector banks and couple of NBFC names stand out. So RBL posted a very good strong set of numbers. IndusInd already has done a decent set of numbers. SDFC Bank again was quite in line. So I think this is the area where one should be focusing on. The GST names which has been doing good, like paint shop or the footwear like Bata, Khadim, Liberty, Relaxo, all. Not to be carried away from this move, because it may boost volumes by 2 to 3% on the fringe side, but I don't think it will be a much booster even for the white goods like washing machine makers and or water heaters. So net the most of the positives which was being rolled out from the macro front has already been priced into the stocks. So now again it will be back to stock specific and earnings related move in the market.
Dharmesh, what did you make of Havells? The larger consumer durables reaction that has come in. Maybe Havells also has a part reaction of results, but I would presume this is largely due to the GST moves. 9% up now. This is arguably one of the strongest move that I've seen this one make in a really long time.
Yeah, Havells has been an outperformer in this segment, and their forward and backward integration is playing well. Earlier used to be getting to a niche segment, and now they are pouring into the lower segment. Lower price electrical like fans and equipments as well. So net if you see again today's move is purely related to the GST benefit which has been offering, which again to my mind it not be more than 2 to 3% on the volume side. That is it, and the whatever pass on is there, it will be consumers are going to benefit from that pass on. So you won't be putting 2 ceiling fans at the same place. If one is required, it will be one only. So from that perspective, I don't think much of a headway on that count. But yeah, relief for the consumers just before the festive season begins, and these 3-4 months is from the consumption perspective is pretty heavy for all the electrical equipment manufacturers as well. From valuation perspective, I do think there's still a scope for Havells to go up. 750, 800 kind of levels should be rich valuations for Havells. So a room of again 10-15% kind of an up move from the current price levels where it is prevailing. This is based on FY20 earnings estimate, assuming that 20% kind of a CAGR it's going to report based on all the good macros going in favor of Havells. So that is my sense on it.
Let's listen into what the management of Havells had to say on their margins as they spoke to Bloomberg Quint earlier.
If you look at last year, definitely the margins were low, but overall sequentially we have been maintaining the similar margins. There has been focus on brand enhancement and deeper penetration, and hence being closer to the consumer. So I think overall we've seen improvement in both underground cables and domestic wires in terms of margins. I think we're looking at a decent growth in Lloyd. I think Lloyd play has to be looked at over a longer period of time because a lot of things have to come into play. You know, brand building, the product, the manufacturing. So a lot of things have to be looked at over the long term. So we are very, very, I would say, very positive about this acquisition, and I think over the next few years it should play out very well for Havells.
Well, that's Havells for you, and the stock is doing really well for itself. Sumeet, Bagadia, if you had long positions in Havells, would you continue with the long positions?
Oh yes, absolutely right. One can continue the long positions in Havells because the stock has given breakout and the longer term time horizon charts are looking good. From here on, there is a possibility that the stock can move up till 640, 650 levels. So one can carry the existing long positions and can use the trailing stop losses. Trailing stop losses can be placed at around 595 levels. And on higher side, we can see a move around 30 to 40 points in the next couple of days.
Okay, that's the word on Havells, and the stock has done reasonably well for itself. A clutch of other names have, which brings me to what we do at 3:10 almost every single day, and that is tell you what are the stocks that could enter the ban, FNO ban, or come out of the FNO ban. Expiry week as well, 3 days from now. So lots of brisk activity expected. Navneet, what's on your list?
Neeraj, two stocks which have been in focus, and we were discussing with Hemen as well, Adani Enterprises and Adani Power. Despite of being an FNO ban, we've seen the stock surging. There was a lot of activity on the cash side, but now the open interest has come very close to the 80% mark. Remember, for a stock to come out of the FNO ban, it has to fall below the 80% mark. So both these stocks as of Friday, Power was 82.9, Enterprises was 80.3, and today's activity suggests on the FNO side, there has been some unwinding for a couple of option strikes for both these stocks and also in terms of futures. So they could be out of the FNO ban period for tomorrow's trade, and both of them have been trading with gains of between 3 to 5%.
Very interesting. Hemen, in light of this, the possibility that they might come out of the FNO ban, what would your trading position be on these two? I know we spoke about Adani Group stocks earlier, but that reference was more to do with Adani ports as a trade. I remember you saying that the other two stocks were too steep a move for you to trade them now, but they might come out of the ban. Could this have an impact?
I think so. I think exactly what Navneet said, that there has to be some long unwinding going on if it has to come out from here after such a phenomenal move. So I wouldn't be too brave as to short the stock. There's no indication. But if I had some positions, I would definitely book some profit, because if the open interest comes down so sharply, I have a feeling there is some long unwinding going on.
Very interesting. Dharmesh, what are your thoughts? Adani Enterprises as a stock?
I don't track it, closely, so won't be able to comment on that.
Yeah, that makes probably the whole world right now very difficult to figure out what the exact value of Adani Enterprises could well turn out to be. Adani Green Energy, as we said, doing very well for itself too. So a clutch of names doing rather well for themselves in the session. Before we get to what dealing rooms are recommending in the session today, and we'll get to that in just moments from now. What else? We've spoken about stocks which are doing well. Let's talk about stocks which haven't done well today. Take Solutions has had a joyride of sorts today, or maybe not a joyride, but a ride for sure. Was down 20% at a point of time. Now down about 6.5%, 7%, so certainly off the lows of the day, but under pressure today. South Indian Bank has been clobbered, 17% off, 18.5 rupees right now, and just goes to show that banks have had some serious moves this earnings season. DCB, Federal Bank, South Indian Bank, all of these are case in point. What about the two stocks which have lost out this earnings season, Dharmesh? One of them is South Indian Bank right now, which is down about 17%. And if you track DCB, then that one.
See, what is happening in the market is, the breadth of the market is getting narrower and narrower. So the quality has to be there. And earlier, I mean, couple of years back, when the entire, private sector banking space was moving up because they were getting business which PSU banks were losing. And initially, DCB, Federal Bank, South Indian Bank, they all managed to garner some sort of a business, so they were rewarded and the stock prices moved up. But the recent numbers again put a question mark on the ability of these banks to expand and capture the opportunity which is there in an aggressive manner. Because what seems is likely, unlike RBL Bank, which almost of the similar size, they have been able to carry on the growth rate at 30-35% and getting the market share. These banks have lost to the larger peers like Kotak or IndusInd Bank, SDFC, Yes Bank, because they have also become very aggressive and they are also falling into the markets where these banks were prevalent in a bigger way. So I think it's now purely a performance driven rewards which will be there, and higher valuation multiples will be given to the stocks. Even extreme valuation multiples will be given where the performance is there. So South Indian Bank, DCB or Federal Bank did not perform. Even the asset quality was not comfortable and they were losing on that count as well. And so the market has punished them. So difficult for them to come up from here. And my own sense is when the PSU banks report numbers, again, you will see the same kind of a selling pressure in them. Right now they are in a pullback mode, but it's getting ready to be sold off eventually.
Okay, some flashes, of course, coming in from the IBA presser now for the last 5 odd minutes. And remember, 2/3 of the PSU banks have signed the ICA this morning. The intercreditor agreement provides for certain facilitation for early resolution of stressed assets. The RBI circular prescribed that a resolution plan is to be prepared within 180 days. And some private banks have requested some more time to convene board meetings as well. End of the week, some of the other banks could sign on as well. This is something that VG Kannan, the CEO of the IBA, has mentioned. And we'll get in Vishwanath a bit later on to speak about the significance of this. I think a bunch of string of pearls measures being done or tried out to aid the banking industry. Let's wait and watch if this proves to be something material. However, it's 3:15, that time of the show wherein we should get you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are back together after a while now. Lots of holidays in between, but finally we have both of you again. Gentlemen, good afternoon. And let's start off with the holiday boy. Yatin, let's start off with you first.
Yeah, thanks for that, Neeraj. Wipro, that is one stock which nosedive almost 6% in intraday trade. We had some good recovery. And the talk on the street is that domestic funds are, biased at lower levels. And probably that is the reason why the stock has been, very close to the, highest point in the day when it comes to the weighted average price. So Wipro is something wherein dealers remain slightly positive on. Granules, that is also one stock wherein dealers are expecting some bit of short covering. And remember, they also report their quarterly earnings today. So ahead of that, dealers do expect some bit of positiveness in the stock to continue. And finally, Sterlite Tech has been in focus, good quarterly numbers, and HNIs are said to be biased in trade today, and dealers expect the upward momentum to continue in Sterlite Technologies. And remember, the stock has been correcting from levels of over 400 and now at around 340. So probably some bit of fresh buying is seen in the counter from the HNI desk, but Darshan has a few more stocks to talk about.
Yeah, so Maruti will report numbers on Thursday. Today you see it saw the big spike, the counter at levels of 9,700. The dealing room that we spoke to do indicate the fact that the street believes this time around Maruti will post a strong set of numbers. Technically also it's moved almost 1,000 points in a matter of months, so there is enough technical evidence also to take the counter much higher. So Maruti is the first stock. The next one is Bata. Now Bata is up almost 7%. There are three things that are working for Bata. First of all, the results were very, very strong. Secondly, the GST news that came out also benefited. And on the technical side, the momentum is with the counter. It's trading at record highs. The management commentary was rather strong. So dealers believe that, the traction in some of the counters which are trading at lifetime high, it will continue. So Bata is something that they're speaking on. And the last stock that dealers are talking about is Dalmia Bharat. Cement hasn't found a lot of flavor as such, but some of the large domestic funds are taking a little bit of positions. They've started to take positions in the cement counter, hoping for a recovery that would come in. And today, decent volumes on Dalmia Bharat, and some of the large funds have accumulated. So we'll wait and watch what happens with the counter.
Very interesting. Many thanks for that, Darshan. Dalmia Bharat, some large funds accumulating is what dealing rooms are telling us. Sumeet Bagadia, I want to come in on Dalmia Bharat as a stock. Cement companies have shown a bit of an uptick in the last half an hour. What about this one in particular?
Yes, we have already given a buy call in cement, Ultratech, and we feel that from here on, most of the cement stocks will give good upside move in next couple of days. As far as your question on Dalmia Bharat is concerned, Dalmia Bharat has been consolidating, and in last couple of days, we have seen a consolidation between 2400 on high side to 2280 on lower side. I think immediately it's quoting about 2400 levels. If the closing is seen about 2400 levels, then there is a possibility that we might see a move around 100 to 150 points from present levels. That means on higher side we can see levels of around 2500 or 2550 levels. So for a trading perspective, those who have taken long positions, they can hold on the existing long positions, and one can initiate fresh long at the current market price with a stop loss to be placed at 2350 on lower side for the upside target of 2500 and 2550 levels.
Okay, that's a hold on Dalmia Bharat. Just to revisit few technical calls given during the show. Ramco Cement, a call given by Hemen. I think the target has been achieved. And Vedanta, which we highlighted, went up in the intraday session. I think in the last half an hour or 45 minutes, the surge came up for this one. And MGL2, where there was a call given by Hemen, that too has gone up in today's session. I want to pull up Delta Corp. The numbers come out today, and ahead of earnings, I guess now the stock's also already trading at a day's high. Sumeet, if I could come back to you and take a technical view on Delta Corp at current levels, what are the charts suggesting?
See, Delta has given a correction in last couple of months from the levels of 380. We have seen a steep correction, and now the stock is quoting at around 225 levels. From here on, there is a possibility that we might see pullback, in which we can see levels of around 250 as an immediate target. Delta Corp has resistance at around 250 levels, and it has multiple resistance at 250 levels. So once the stock is able to break 250 and gives closing above the crucial resistance levels, then there is a possibility that we might see a good upside move in next couple of months. I think immediately for a pullback, one can initiate long positions at the current market price with a strict stop loss to be placed at 215 levels on lower side for the upside target of 250 levels.
Well, interesting. Ahead of the numbers, Delta Corp up 6.5, 227. Sensex, of course, hitting record highs. We are about, what, maybe 90 odd points away on the Nifty for that to happen as well. But the way the markets have gained today, and mind you, while the Nifty Bank may be up 0.5%, the heavies are not really contributing in a meaningful way. The likes of HDFC Bank, for example, very, very quiet. HDFC by itself as a financial name has been very, very quiet today compared to some of the others. So, well, the heavies are quiet. Reliance Industries has not done anything material in today's session as well. SBI might have gone up a couple of percentage points, but that's about it. Otherwise, some of the heavyweights have been rather quiet in the session today, which brings us to closing strategies and then maybe some investment ideas. But first, closing strategies. Hemen, Kapadia, to you first. Your top closing strategy.
It's hunky dory. Everything looks like a honeymoon phase, Neeraj. So,
why are you sad then? Why are you sad then?
It's too easy. Money doesn't
okay.
It's made that way. But anyway, that's on a lighter note. I think multiple stocks. I think Shriram Transport Finance Corporation, Raymond, Canfin Home, Star. I know you'll tell me to give you just one stock.
Your favorite amongst these 4 or 5?
GSFC.
GSFC.
Yeah.
That's your favorite BTST?
Yeah, BTST.
Okay, and what, a target of 2% and a stop loss of 1%?
Yeah, small stock, small. It's just around 104.
Okay. GSFC, that's the top buy from Hemen, Kapadia. What about you, Sumeet? Your top call?
Well, I think Adani Port has given a good move. It can move up from present levels, and on high side we can see Adani Port can give move of around 10 to 15 points. That means 395, 400 can be the targets. Those who have taken long positions, they can hold on the existing long positions. One can initiate fresh long at the current market price with a trailing stop loss or fresh stop loss to be placed at 375 levels on lower side for the upside target of 395 and 400 levels.
Okay, that's Adani Ports buy call closing strategy from Sumeet. Pull up United Spirits. Remember, the earnings come out for this one today, and like Delta Corp, ahead of its earnings, United Spirits too went up in the last half an hour of trade, though it's off the day's high currently, but still sitting with gains of nearly 1.5%. Dharmesh, any expectations from United Spirits, and if not, what's your fundamental bet in terms of any stock that you're seeing at lower levels, which could be a value pick?
See, I'm still, bullish on the auto ancillary space, and I think a good correction has happened in most of the quality names out there. So, Bharat Forge is the one which I am, quite bullish on. US would be reporting their GDP numbers for Q2, and likely it's to be in the range of 4% plus. So, Class 8 trucks have picked up there, and Bharat Forge is a prime supplier of forging materials out there. Currency depreciation also helps it in a big way. So that is one stock which valuation comfort is there and has corrected significantly. It gives a valuation gap kind of an opportunity to play on. The second is Bharat Electronics. At 100-101 kind of price levels, it looks pretty attractive. You know, order book, everything is placed 3x is the kind of order books to sales, and the margins are intact, balance sheet is fine. So I think these two stocks can be accumulated from a trading perspective. Overall, from a larger sense, I am still skeptical on the market. It's more of a trading kind of a scenario out there.
Okay, Dharmesh, thanks a lot for joining us today and giving us your views on the markets and also some individual stocks. Well, just few minutes to go for markets to close, and we've seen some positive result reaction. One of them was L&T Finance Holdings. Let's just pull up that stock. It's almost a day's high, sitting with gains of nearly 10%. Let's just pull up the futures as well and check if there is any fresh long build-up that has been seen in today's trade. Hemen, 10% higher. If somebody took a long position in the morning, should they be covering their position and booking profits, or it makes sense to take it for tomorrow?
I think probably can take it for tomorrow. It's finished a weekly correction now, so yeah, I think it's slightly uncomfortable, the speed and the quantum, but I think 174 or 175 can be expected to see in tomorrow.
Okay, that's L&T Finance Holdings. Couple of banking counters. Bank of Baroda too has surged, so that's up almost 5.5% in today's session. And remember, this is an earnings heavy week, and ICICI Bank will be coming out with its numbers, and the start has been good for ICICI Bank, at least for this week. That's also sitting with, it's a heavy weight, so that's also contributing up almost 3.5%. Sumeet, on the charts, would you take any trade on ICICI Bank at 275?
Yes, it's looking good on charts. I think from here on there is a possibility that we might see a move till 282, or there is a possibility that we might see a one-way move till 295 levels. I think immediately those who have taken long positions in last 1 or 2 days, they can hold on the existing long positions. In fact, one can go ahead and buy at the current market price itself with a stop loss to be placed at 268 or 269 on the lower side for the upside target of 282 and 290 levels.
Okay, that's a buy on ICICI Bank. I mean, very quickly, just trying to address your viewer queries. Any thoughts on the charts of United Spirits or on Bombay Dyeing? Is that a hold or sell?
I think United Spirits is a hold, but I think the stop loss comes in at the recent bottom of 548.
And what about Bombay Dyeing? I don't have a level, but somebody's asking, is it a hold or a sell?
Hold with a stop loss of short-term stop loss of 202, positional stop loss of 191. Disclosure, I have an interest in Bombay Dyeing.
Okay, so that's a hold on Bombay Dyeing, but just few minutes to go for markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, good day for the benchmarks, good day for the broader markets as well.
Yeah, very. Actually, the second half of trade turned out to be very positive, Navneet, and aided in part by banks. I think private banks, PSU banks alike, because SBI too has gone up, and as a result of that, the Nifty Bank doing well, which is what's propelled the index higher. So about 0.6%. The Sensex nudging life highs in the session today as well, and the mid caps and the small caps too bounce back after starting off on a flattish note. This is not a bad close at all, and you will see in the market breadth, it may not have a staggering difference between the gainers and losers, but you'll see the gainers having an upper hand today. However, let me first stick to the index. Now it will bring you up to speed with almost everything else that's happened in the market. But look at the large caps. UPL 16% closed the Arista acquisition. That's just a remarkable move that has come into UPL. Commodities by and large did reasonably okay today. Vedanta, there was some steel companies which did reasonably okay. ITC's gained 3.5%. Bajaj Finserv up about 3%. ICICI Bank about 3.5%, Maruti 3%. I would reckon ITC, ICICI Bank and Maruti would be amongst the names, along with UPL, that will be making their presence felt on the top contributors list. The losing side, I think Yatin's story headline, Bajaj Auto sneezes and the two-wheeler space catches a cold, turns out to be true because Hero and Bajaj Auto, both of them down. Wipro, a bit of a result reaction being seen. HDFC Bank, a result reaction being seen. RIL ahead of the results is down about 1%, but not too many losers, to be honest. RIL might, and HDFC Bank, I think, would be amongst the top heavyweights in the points contribution in the session today. But mid-caps, midway through trade, just a remarkable turnaround and some strong gains for select names.
That's right, Neeraj. I think there were a lot of gainers in terms of GST rate revisions and also a couple of result reaction which came by. So let me start off with Vst Industries. Obviously, the results came out, which were good, but the entire cigarette space went up from the likes of Godfrey and also ITC because there was no mention of compensation cess in the GST Council meet. So VST also up and Godfrey closing with gains of 7%. Relaxo, the footwear pack, Relaxo as well as Bata reacted positively. Liberty too was up and about, but the GST rate for the segment 500 to 1000 going down to 5% from 18% seems to be auguring well. And we did speak to the management of Liberty and Relaxo. They categorically stated that it will be benefiting them. L&T Finance Holdings reacting very positively to the numbers, up 10% in trade today. PC Jewelers, the stock was up 20% on Friday, additional gain of 14% coming by today. But not to forget, it's a beaten down counter, so it's bouncing back from its lows. Havells reacting to numbers and also from the consumer durable pack. It was up because of the GST rate revision, 9% higher. There was fresh long build-up seen for Havells. Stock was up on high volumes. And Delta Corp, the company will be coming out with its numbers today in the evening, 7% higher ahead of that. On the losing side, you had result reaction coming in for South Indian Bank. That counter had a gap down opening in today's trade and closing at day's low with cuts of 18%. Shrey Infra has been quite weak in the recent past, so that counter too saw cuts of nearly 5%. Take Solutions, we've been talking about that stock, though there was an intraday recovery, which you can see on the chart. It had a gap down opening, recovered a bit, closing with cuts of 6%. However, Just Dial reacted to the numbers negatively in today's trade. That was down 4% in trade, and the entire two-wheeler pack was under pressure. Something like TVS Motors, a stock which touched its fresh 52-week low, that's closing with cuts of nearly 4%. And also lastly, MCX, despite a better operating performance this time around, I think the street was not too enthused with the numbers. The stock finally closing with cuts of 4%. Neeraj.
Boy, what a good start to the expiry week, Navneet. Something that we probably didn't anticipate at the start of the trading day. I think the belief was that with the GST cuts, the benefit and the sentiment would be positive. But hey, it's led a clutch of names higher, which is actually not a bad thing. 27,000 here for the Nifty Bank once again in the Sensex at record highs. No one's complaining.
Yep, and we've done pretty well for July series. I think Nifty is up nearly 5%. Bank Nifty has given gains of nearly 2 to 3%, but it's been a good series after a lull that one saw in the last 2 months.
Yeah, today we are doing this fun and games wherein the chart gets juxtaposed on an image that is there beforehand, but that's okay. This is the intraday move. Bring up the market breadth first and show you what's happened there. And there, as we were saying, it's close to 2:1, or actually less than 2:1. So no breathtaking difference between the advances and the declines. But hey, we have advances and the market width is positive, which is not a bad thing.
Yes, and let's check what sort of participation we saw in today's trade, considering the markets edged higher. Day one of the expiry week, so NSE turnover was, F&O turnover was slightly above the average turnover of 5.5, and NSE cash, Neeraj, I think that went up a bit from that range of 27 to 28. The cash turnover today stood at both combined BSE and NSE would be around 35.
It's interesting in the contributors list. Maybe Reliance on one side and HDFC Bank right there. And yeah, not surprised, ITC, ICICI Bank, Maruti, UPL. We kind of guessed it was an easy guess really to make. Good contributions from select names out there. All three, in fact, doing reasonably well for themselves. UPL, of course, a star with the limited weightage that it has, but a 15% move would bring it right up there. But interesting, Navneet, we've done this well without the two heavies.
HDFC and Reliance.
And HDFC as well, not doing well.
So it's good news because these stocks have already moved higher on YTD basis, and it's good to see stocks like ITC and ICICI Bank, which so far have been the laggard, leading the charts, at least in today's session.
Yeah, and the move from Maruti has been surreptitious, to be honest. I remember at 8,400, and then within no time it's back to 9,700. It's been
I don't know if the money is moving from two-wheeler to four-wheeler in today's trade.
Well, that too. Could be an interesting one. Tata Motors too was trading reasonably well. Final thoughts from our experts then. Sumeet Bagadia, to you first. From amongst the auto names, Sumeet, what stood out for you as a trade? I mean, for somebody who's looking at the charts of a Maruti or a Tata Motors on the long side, or a Bajaj Auto and a Hero MotoCorp on the short side, what's a better chart for a trade?
I think one should go for a long side trade, and that should be Maruti. Maruti, after a consolidation, it has given a good move today. Now looking at the chart, it seems that the stock is headed higher. And from here on, we can see a move of around 200 to 300 points immediately. And if 10,000 levels are taken away convincingly, then we can see a further or extended move till 10,500 levels. But immediately, for a trading perspective for next couple of days, one can initiate long positions in Maruti at the current market price for the upside target of 9,900 and 10,000 levels. Those who have taken long positions, they can hold on their long positions with the trailing stop losses to be placed at around 95.50 on lower side for the upside target of 9,900 and 10,000 levels.
Okay, Hemen, final thoughts from you. The approach would be tomorrow to be on the long side, and can we expect all-time high levels from Nifty this week?
I think so, Navneet, because we have a significant open interest at 11.1. I think at 11,130 or something, we see short covering coming in. And I think this expiry might surprise on the upside, because a 52-hour range, ninth trading session only, 10,926, 11,078. Assumption is that we hold and sustain above 11,078 Navneet. I think it looks good, and I think there could be some scramble for short covering if it market sustains at 11.1. Very much possible. Breakout has almost happened, so to speak, Navneet.
Okay, thanks a lot. On that note, to both our technical experts, Sumeet as well as Hemen, thanks a lot for joining us and taking us through your technical views on the markets. We'll see how the markets open tomorrow. As of now, the closing to day one of the new week has been pretty good, Neeraj.
Yep, on that note, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching.